Greetings, traders. Thank you for joining with me today on this special presentation today for my new Volmo indicator, volume momentum indicator. Actually, it's not new. I've been using it for many years, testing it, trading with it, researching it more, trying to make it as close to perfection as I can for reading the markets. I think you'll really like it. You'll have a great success with it. Once you start getting into it, like with everything that's a new indicator that we put out, you just get into it, test it, run it over several charts, like 10, 20 charts. Just get real into the research, and then when you start trading with it live, things speed up. You'll notice the nuances that I'm going to show you today, and you'll have great success. I'm going to talk very slowly today so you can take notes and understand the four methods for reading price action with the volume momentum indicator, Volmo. Now, the main thing to remember, these are not trade signals, although you will end up probably interpreting them as trade signals once you get into the action with them, because you'll see the reliability coming in so much, you'll say that's a good signal there. But what it's technically is, now this is not like a normal indicator on price. Most indicators that you see are based on the movements of the price. This indicator, the Volmo, is based on the movement of volume and the momentum of volume. So first of all, I've got a plain white chart here, and with the Volmo indicator and these orange lines are going to be significant, and I've colored them yellow in the black chart to stand out more. So before we go into the boomerang use of Volmo, which is a little different than on a plain chart, I'm going to just show you the plain chart. So I'm going to slide this over so you can see some of the basic things I'm going to show you. And again, take notes, and you'll have this recorded video here for perpetuity, so you'll always be able to refer to it. So I've just randomly got this chart. I think this is today's chart. Let's go back into where there's a little more movement today. It's an option expiration day. They're just kind of cranking them straight up, which has been the norm lately, just manipulating NASDAQ and jamming it up and up and up. We don't allow any pullbacks anymore. That just only goes up. This was really ridiculous, but that's that's the way the game's being played now by the powers that be, shall we say. So what we've got here, let me find an area that'll present some challenges to us. That's the most important thing, and the easy parts too. But okay, this is a good one here. This is nice. This will help us. Okay, so first of all, with Volmo, volume moving average, you've got histograms that tell you when there's a volume shift directly. Those will turn green on bullish volume shifts and red on selling coming in. What I've applied over these are very important, and you'll find to be extremely valuable. Basically, when you see red histograms, you want to stay on the sell side in conjunction with the momentum, which I'll show you why in a minute. These two lines here that I've built now, they just look like two simple lines, but you're talking years of testing and research to develop these. So it's more than just two simple lines, but you have a fast momentum line and a slower one, obviously a thick one here, which is kind of the way we've worked a lot of our boomerang indicators. I find that to be the easiest thing to read when you're under the high speed action. To me, the easiest thing to read for a fast line is a thinner dashed line and a thicker one in this case. Now, they're the same exact color that I've got here, but you can change these to any colors you want just by going into the indicator. I'll show you how to do that real quick, although you should know if you've been with NinjaTrader and Boomerang for a while, these are common, simple procedures that you should be well familiar with. Here's the indicator, Volmo here, and if you want to change this, you just go into these areas here. See what I mean? Here's the histograms, the Volmo histograms. Here's the slow moving average, SL moving average, and the fast FA moving average. And you can change the line thickness and the colors here by clicking on the line. You see that? Everything's adjustable there. 3 points line. If you click on the little box there, it opens it up, and when it's set to transparent, you'll have these default colors. But you have the line thickness here, solid. It's kind of set at a default setting here with being set at transparent. But anyway, that's not so important. The main thing is just get into the indicator and you'll see the results here. So here's the market opening up. This is a West Coast chart. In New York, it's 6:30 here. It's going to be 9:30 in New York with the U.S. stock market index. For right now, I'm just using the mini NASDAQ contract, this is a really good day trading indicator that I built for you here, the Volmo. It's going to show you the volume coming in and off of different levels of price, and it'll show you in those shifts where you can make trades. So with the the Volmo shifts, you'll be able to understand it. I've got 4 key things that you're going to look for. So I'm using, again, mini NASDAQ, one of the best day trading contracts so far that I've found for the U.S. stock indexes. Now this will work beautiful on crude oil. It'll work great on any contract, any stock and ETF, because we're not measuring the stock price. Or you can use it on a 1-minute chart, a 2-minute chart. This is a 450 tick chart, which I use as a standard default for our Boomerang day trader systems and method. I love 450 ticks because it's a nice hybrid of sort of a fast time frame and a slower, more closer to like a 3 to 4 minute type time frame. So it's like a little hybrid, and then using the ticks. But the great thing about the Volmo 2, most volume indicators, I looked for decades and I couldn't find any that were any good, other than, for example, what we use in our day traders action live room, and I recommend to our traders, which is shown on the Boomerang blog, how to build this volume meter. This is a standard 1 minute on the candles here, and it's painted red or green according to what the volume is on that specific 1 minute candle. If I put this on ticks, it'll all just fall apart. It won't work. If you put it on Renkos or anything else, it won't work. So a lot of the volume indicators were like that. They only work on 1 or 2 minute type charts. So this isn't going to help you really to read this will help you read the volume. I can glance at this and say, the market's really slow right now. It's option expiration right now as I'm recording this on a Friday, and I don't trade on option expiration, so I'm taking the opportunity to make this video. But you can see the volume here slowly ticking in. It's very slow volume, this 239 contracts and 157 on the individual. But to read this when you're day trading, you'll see in a moment, it's not going to tell you that much. It's very hard to determine that. You'd have to kind of sit there and go, okay, volume's picking up. Ooh, that was a buy candle or a buy surge. It's very difficult. But watch what happens when you use Volmo. Now, this is not the same time right now, but so here's the market opening. And you see the volumes jumping up here, tapping on this orange line. What we're mainly focusing on is the zero line. In this case, on the white chart, is this black line on the Volmo here. See the zero line, and on the on the white chart, on the black chart, I've colored the line thick white here because it's a black chart. You've got to be able to see it really good. That's where your focus should be, because when the histograms trend towards under the zero line, they're going to change red, and they're going to change green when they start moving above the zero line. You see that? Sometimes there'll be a slight little variation, but generally that's going to be it, because we're dealing with the volume coming in. So that's the first thing, is just remember we're focusing on the zero line in the relation to the histograms and to the momentum lines. So here's the market opening up. It's kind of popped up a little higher, and you can see in pre-market the volumes tending to be on the bullish side here, kind of choppy, and they come in right before the opening, first half hour before the opening, and they start popping up here and tapping this orange line here and here at the 40-point level, which is also going to be a key thing for us to watch. So now the market opens here and the volume starts turning negative. See how right by glancing at the Volmo, you can immediately see the volume's turning negative, and you had a pre-warning right up here with the fast volume momentum line number 1 and number 2 matching color. You had a very small bullish volume histogram here, and now the volume shifts. Now, when the volume shifts, again, this is not an indicator on price, but it's on volume. It's a totally different thing. Sure, you're going to get pops in the market, but as long as you see the trending of the volume to be bearish, that price is going to go lower. So that gives you a hint right there that if you're trading and say you're short and the market's popping against you, you can gaze at the Volmo and say, no, it's still looking pretty weak on the volume. The histograms are lower. Sure, they popped up here, and that's reflected on this little pop-up here, which might have just been some cowboy with a program putting on, 400 contracts or something. Who knows? But you can see here, and this is the rule number 1, or the method number 1. We're going to watch for the thicker line, which is the momentum moving average line number 2. The thicker one crossing under the zero line is going to lean on the bearish side, and crossing above it is going to lean on the buy side. Below it on the bearish side, above it on the buy side. You can see slightly. Now, it doesn't mean a trend necessarily, but I'm saying that's where you want to watch for, and this is especially used for boomerang trades, which I'll show you a little bit later. But first I want to cover the 4 methods on the white plane chart so you can see how it works, and then you can reapply those to boomerang, which I'll go over again on NASDAQ, and it can be applied to any contract, any stock, and ETF. We're not measuring anything but the volume. And look at how great this indicator is. So here's a cross under, and you can see it's weak here anyway. You had the momentum indicator number 1 cross under the zero line. Here's number 2 right here, and look what happens. Say you were short here and you're holding short 69. Look how it drops right down to 62. Now that's 7 handles. That's a mortgage payment if you got 5 contracts on. You got to keep in mind how serious that is. And what did the Volmo told you that. I'm not saying this is what I'm trying to say. I'm not saying this is a short signal here, but if you were already short and they popped up here, you would have said, oh, okay, I'm going to hang in there because it looks like it's going to work out okay. But then when they crossed under the zero line, the price came right down 7 handles. That, like I said, that theoretically that's a mortgage payment, not on 1 contract, but on like 5 contracts. You're moving at $100 a point. That's 7 points. That's $700. Maybe not. It depends on how big your house is, right? For some people, that's a rent or a mortgage payment. Anyway, you get the idea. But look, then they pop back up again. But you've got everything under the Volmo zero line now, right? So even though they popped up, look what happened. Crunch, back they come again. Here's another mortgage payment there. Again, I'm just saying that as a sort of an example. It's not, we certainly can't guarantee you'll pay your mortgage with the Volmo or any indicator. You have to realize that futures trading is very risky. You should only be using risk capital that you can absolutely afford to lose. Don't go in there trading based on any indicator or anything other than your experience in the market, your use of the tools that I'm showing you, your skill in developing them. Don't go out and put trades on tomorrow with the Volmo. Just wait and watch and learn. Run it on the simulator for 4 or 5 hours and just sit and stare at it and get real comfortable with it. Then when you decide to trade, just go light and you'll be quite pleased, I'm sure. Now here's an example. So the market's choppy. We got past the first hour of trading. I'm just using this random day. I don't know what day it is or anything. I'm just randomly using this to show you. So here's the market coming down. Now it's kind of popping back up and getting choppy. But you see here, you have a bullish histogram coming up here and a matching momentum. So the volume is now shifting from bearish volume to bullish volume. You can see it right here, crystal clear, in the momentum indicators. Even though it's still red histograms, notice the shift there. So that tells you, get ready to look for dips to pop higher. That's all it's telling you. It's not giving you a trade signal. It's just telling you dips probably will get bought up here, especially on the crossover of the fast line over the slower line. Well, what happens here is they start popping and they dip down a little bit here again, but notice how the dips keep popping up. Now you've got a crossover of the Volmo indicator or momentum indicator number 1 over the zero line. That's a key signal to watch, especially for Boomerang anytime, but especially for Boomerang. This can be incredibly valuable, which I'll show you in a minute. This is our first step, first method for using the Volmo. The momentum trend band number 2, which is the main thicker one, crosses over the zero line. And look what happened right on this candle, right when it crossed over. And you see how because volume front runs the price. That'll always be true. The volume coming in will create the price. So using a volume indicator with extreme precision like the Volmo is will give you a real edge before price moves. And you can see right here, that's exactly what happened. From the top of this candle at 59.58 on mini NAS to the top 59.69, it went up 11 handles. That's a mortgage payment and the start of a Maui trip to Hawaii or something, maybe. I mean, if depending on how you want to spend it or paying bills or whatever. But I'm just giving a theoretical idea how valuable this can be. Now let's go over here, and I'm just watching this first method that I've showed you, or rule for reading price action. You know, you can go in here first of all and say, okay, well, volume's dropping. Is another little secret here under the 15 period line. That's this gray dash period. Histograms dropping under that is weakening too. See how they're jumping up here, but all of a sudden they're kind of holding under the 15 period line. They jump up again, and now they're holding, and then there's a color change, and the volume momentum indicators have changed to red. Everything's matching red. That's another kind of sign that the price is going to go lower. But for right now, and you can take a note of that, but I'll get back to it a little later. Let me make sure I talk slowly on this. The cross under here of the red histogram, but a cross over here of volume momentum indicator number 2, the thicker red line. Notice what happens. Right in the bottom of that candle, 57 ultimately drops down to 45, 12 handles lower on this move. See that? So that cross under is really significant. That's the first approach you want to learn. Write that down. Momentum trend band number 2, crossing over the zero line. Now here's a case where it just eked over the zero line, and I'll show you in a second how to read this right here, why you wouldn't have gotten all bullish here. But it crosses over on the upside, gets a little pop, definitely got a little bit of a, the dips are getting bought a little bit, but everything changes red again here, and now it crosses under on the downside again after a very weak pop. That's a very bearish sign, by the way, and look at what happened. Whole thing fell apart. Again, I'm just showing you on this plain white chart so I can show you the methods. So what we've learned in this first part is, number 1, the momentum line number 1 crossing over the zero line as a method to watch for big price changes usually. And when it crosses over and it's kind of flaky or weak, in this case here, you can watch for that price to kind of start failing. So this is going to help you in choppy markets, and it's going to help you in markets that really want to go in one direction but are showing weak signs on the volume on an attempt to run over. You had the crossover, they popped higher, but as they're popping higher, you go, ooh, pretty weak. Then you see the momentum lines change to match color. Then you see the histograms move lower. You see what I mean? All of a sudden you go, and this doesn't look very good on the upside. Then you have the cross under and the follow through. Okay, so that's the first part. The second element in trading with the momentum indicator, the volume momentum indicator here, affectionately known as the Volmo, is when you see prices coming up and tapping the extreme levels of 60 here, on the red on the upside, telling you it's a reversal sign, green for a buy sign. Now, it's not always going to be right exactly on the tap itself, but in many cases, this is an early hint that the volume's getting kind of what I call overcooked on the downside. So watch for a possible reversal. So you get a tap here. And again, I'm just working with this isolated part of a rather choppy chart off the morning opening of one day in NASDAQ to show you. This isn't like really smooth trends and all that. And look at how beautiful it works. So here it didn't quite hit it, but it almost hit the overcooked level. The trend bands change to match color, and you can see these dips keep getting bought up here. Now, keep in mind this dip right here, 57.75, jumped to 64. That's a 7-point jump. And you knew to buy dips, right? Because you saw the Volmo. Then you had the crossover, and look, they're dipping again right as number one is crossing over and number two is crossing over, and they're dipping again. And look at the reaction to that dip. Prices are dipping if you're watching this live. And look at the reaction. A big pop. That's going to be valuable information for you. So keep that in mind. That's the method number one. Number two, and let me see if I have an example of that here. Yes. Number two. Oh, and I also mentioned the pops to the exhaustion level, or what I call overcooked levels. Let me see if I can find some more of those. Sometimes they just barely miss it, but let me scroll forward and find that. Now here's one coming in the close where they're just banging on that line over and over. That's fine. That's just a strong trend down move that's going really fast. Let me scroll back and see if I can find some other examples. Okay, here's some classic examples here. Markets going up, right? And everyone wants to know where's the peak in the market. So you do different things to find that, which eventually I have a training class on that. Planning on it one of these days. I've kept all this stuff secret for a long time. This releasing the Volmo, by the way, is a big deal for me. I never planned on releasing it, but I just decided recently to do that, and I'm just so glad to help the traders with these type of things. So here's the market moving up, right? Notice how it hits a volume peak right here, as marked by this tap through the red line on the volume histograms. Now it's still moving higher, right? That's fine, because there's always going to be those people that jumped aboard here and they're thinking it's going to keep going higher forever. That's how traders, especially beginners, tend to think. They're not too emotionally experienced in trading or emotionally controlled. But so now notice how the market's pushing higher, and the first thing you know is the volume starts faltering here under this orange line. And I want you to notice that this volume momentum indicator number one, the thin dashed one, has crossed up and over the orange line. You with me? Now that's the second tool I want to give you, or the third actually. The second was the spikes to the overcooked levels, or over exhausted, whatever you call it. They're not trade signals. They're signals, signs of market shifts. But this crossing over the orange and then crossing back under, in a vast majority of the cases, is going to be a sign of a stronger reversal in the cross under direction. If they cross and tap the orange down here and cross back up, an up signal. If they cross over on the top side and then down, is going to tend to lean on being a reversal sell sign. Not a sell trade, not a signal, but a way to read the markets using the Volmo. So here's that occurring right on this candle here. And yeah, they pop it up a little bit more, which is great because that gives you a chance to do what? If you want to turn it into a trade. That's right. Short into the rallies. I'm giving you away some of my really important secrets here. So here they are. And now you've got volume shrinking under the 15 period line. You've got the volume momentum indicators crossing under. That's really important. The dashed line crossing under the thicker volume indicator, momentum indicator number 2, and it's popping higher. Volume shrinking under the 15 period line. See what happens then after that? Now the histograms cross over. Volume stays weak on a little pop, and look what happens. From 59.97, it drops down to 86, drops down 11 handles right there in that move, and comes back almost right to the point of volume exhaustion. But you can see all we want to do is catch some crunch in here, 4, 5, 6 points on mini NAS, sometimes more. Usually with a setup like this you can squeeze more out. But look what happened here based on what we just talked about. Now, do you remember what the last method I gave? I've given you 3 so far, which is the zero line crossover of the momentum indicator number 2, the thicker line, right? I gave you the method of watching for spikes to extreme exhaustion on the red line here and the green down here, right? Do you remember that? Okay, make sure and write that down. I'm not going to have it on the chart here, but write that down. And do you remember the last method I gave you? That's right. When the volume momentum indicator number 1, the thin dash line, comes up over the orange line and cross back under it, generally going to be some kind of sell reversal. When they come down, that's what I'm showing you, because look what happened here. As we caught this and they sold off, look what happened. The volume momentum indicator number 1 came down and tapped the orange line. Didn't quite trade through it, but then it turned up. The colors changed, and look what happened. Oh, I'm sure you're getting pretty excited now. This is pretty good. But just remember, trading is very high risk, and going into the live action and doing this, it's going to take some practice, some experience. Just don't go gung-ho with it, but just, like I said, run your simulator at regular speed, take an afternoon off, and just sit and watch it, and watch what I'm showing you here. We just did method number 3 for reading the markets, and you can see it working beautifully here for a cross over the orange line and a reversal back down with everything matching. Volume shrinking under the 15 period line. And the same thing here where it came down, tapped the line, didn't quite cross under it, but it turned back up. Things turned green. Volume shrunk under the 15 period line. You had another move. Like I said, you get really good at these. These are mortgage payments or vacations or bill paying or kids' school or whatever it is. You get the point. I'm not saying you're going to make X amount of money or anything like that. I'm just trying to give you good visual lock-ons for using the tool. By the way, what also happened here? Exhaustion down here, and on this pop, which you determined and saw because of the orange line tap, right? And the reversal. What do we have here? In this case, when that thing reversed and they tapped the exhaustion, it was the exact high for another reversal. You see that? That's going to happen once in a while. This one didn't quite tap it, but look, if it had, just missed it by a smidgen, it was the exact bottom, exact top. So now, once again, it hits the exhaustion. Almost saw this momentum number 1 hit the orange line, But what else did we observe? Now they crunched it right after it hit the volume surge. That's good. You're going to get good at this. You're going to be able to learn to use this indicator for catching a lot of these things. But notice this. Notice that volume starts tending towards dropping under the 15 period line, signaling more reversing. Again, this is a way to read changes in price in advance of the price changing, thanks to the Volmo indicator, the only indicator in 20 years of looking that I've ever seen that does what I'm showing you here. That's why I invented it, because I couldn't find anything that worked that I thought was really good, so I invented it. Here's a choppy period. What happens? No volume momentum indicator tap on the orange line. Small histograms flipping back and forth between the 15 period levels, generally going nowhere. A very weak cross under of number 1, but again with small histograms, it's a choppy period. Volume momentum indicator number 2 cross. Number 2 tries to cross back up. No dice. It's just a choppy period. It's very weak histograms. Not much going on here. Got to just wait. Now everything matches color. Histograms, momentum lines crossing back under. See the momentum indicator number 2 just barely eked over the line and then crossed back under. There was a volume surge, and now you've got the number 1 and number 2 crossing over and back under the zero line. There's some more selling pressure, and that's just all that is. See, the price is following the shift in the volume, the bearish volume. Bearish volume under the zero line, bullish volume above. Keep it simple and it'll help you. Now, if it shifts, like you see the color shifts here and the price are popping up, it doesn't always mean that this is not a measurement of the indicator, the price. I keep telling you because I want you to really understand it. It's a volume. So the volume may all of a sudden shift from programs, or the riggers come in here and they start spiking the market up or whatever. But it's still, from this you can see it's still bearish volume, because why? Little quiz for you. Why is this still tend to be a bearish pattern on the volume? That's right, because momentum indicator number 2 is still hovering under the zero line. And look what happened. As it's hovering under the zero line, they get crunched again on the downside. So then here they shift back up. The histograms start coming back. You got a matching histograms and colors here, but you're still watching. Now here's the shift with the momentum number 2 crossing the zero line. And those dips are getting bought, and they're ramping them up. You see that? So that's how it works. Here's another shift on the sell side, and there was a counter move. That's a little bit later in the day. Things are going to get a little bit weirder. But right here is where it shifted. Here's where the cross under occurred here on very weak volume as they're popping higher. Number 1 crossed under here with a little sell surge. And number 2 crossed under here. You got to look at this realistically once you get it. 59.86 quarter drops down to 80 half. Do you see that? Just that minor shift right there. And you're in the market and you see this going on. Don't be long, but look what happened. 86 dropped 6 handles right from there, just from that little shift. You're not trying to use this to catch a big move. We're scalpers and day traders. Anyway, that gives you the idea. And I've covered the 4 methods for reading the Volmo with Boomerang, or with the Volmo, the 4 methods for reading the volume and then applying that to where the price most likely will go. I randomly picked this chart. I started this webinar today here. It's on a day off. Like I said, it's an option expiration day, so I'm making this webinar and just showing you this. I picked a random day and I showed you how beautiful that works, showing you on the still chart the methods for trading with the Volmo. Now let's go to a boomerang chart. I'll do the same thing. I've prepared a boomerang chart here using just Volmo. And here's where you use Volmo on Boomerang. Again, let me scroll back and find some periods where the market's choppy and shifts around and makes some trend moves and all that. And let's go back a little further, get away from all these recent rigging periods. It's been going on for a while. They're just jamming the upside over and over, but that's okay. What do we care, right? We're just here to make money and scalp, and that's all that matters. Now here's a big Globex ramp. We'll just take this day. I don't know which day it is. I could look carefully and 9, 10, whatever. Doesn't matter. Here's the Volmo indicator. Now on Boomerang, notice it looks a little different because you got a black background and you got a white zero line. So here it is. I've got none of the other Boomerang indicators, just Volmo, but here's the Boomerang dynamic trend bands, the trade channels, the Cobra, and I've also got the Boomerang Filter on here, which let me go ahead and remove that right now real quick just for clarity. Here it is here. Remove. Let's see if that pops it out. Okay, there's still one line on there. Hold on a quick second. It's part of the filter. Let me quickly hold on a quick second. Let me pop that out of there. Just take a second. I want you to have the cleanest view of just a straight boomerang chart as possible. I should have removed this in advance, but that's okay. No big deal. There it is. Okay, there. Now you've got just a very clear boomerang chart with the sell and buy channels, shaded sell and buy channels. You have the dynamic trend band number 1 and 2 and the Cobra, and of course the signal line, the very thin line running through here with the colored charts that you're all familiar, the colored candles changes that you're all familiar with. So here's the market opening after a big ramp up on Globex. That's been typical lately. Well, what do you see coming into the opening here? Now that you're a big expert on trading with Volvo because of what I just showed you, you're expert now, so you'll be a big expert after you really get into it. Like I said, take my advice, please. Run it on the simulator over the weekend for an hour or two. Just sit and stare at it and watch it live so you'll be ready for Monday's action or the next day whenever you trade. Watch it on Boomerang. Run it live. Watch this video over. Just get yourself real conditioned. This is going to really help you in your trading, and you're going to be real happy. And that's what I look for. I want you to be thrilled about trading and trade, work with me and get involved in our other services so we can all make money together. So here's the market running up. What's the first thing you notice it's doing 15 minutes after the opening? It's banging on the exhaustion line. This volume's banging away here. At some point it's going to get exhausted. The price will get exhausted because the volume's already getting exhausted, right? That's what this tells you. The volume's really going hyper. It's going to get exhausted pretty soon. Not the price. This is not based on the price. This is telling you what the volume's doing. And this right here is saying, uh-oh, caution, volume's getting exhausted. This is probably a lot of shorts getting stopped out and re-entering long in some cases. Well, now look. You get a shift in the color here after the upside exhaustion. You get a shift in momentum indicator number 1, and you start seeing that volume drop down. Well, they make another surge for whatever reason. Maybe a program came in, maybe some more buyers said no, now they like the long side. A lot of times beginners are always trading the wrong side, then they reverse and get back on the other wrong side, and that's an advantage to us because it's a zero-sum game, and if we know what we're doing and somebody else doesn't, well, then we're going to take their money, but that's okay. So now, as the price pushes higher, notice how it double bangs the exhaustion level again. So here's a price surge, and that second double bang was the exact top. You see that? You watch for the shift and you start seeing the volume shifting, but I'm talking about boomerang trading here. That's what this chart's for, just showing you the boomerang trades. Well, now the prices have crossed up over here. You have, whenever you see, especially the momentum number 2 cross over the yellow line, or in this case yellow, orange on the other chart, and then recross, that's usually a very powerful sell signal, a reversal signal, I want to say. I don't even want to say signal, I want to say it's a reversal, big reversal volume sign. And guess what that's going to usually do to the price? You got it, that's right. So right here is number 2 crosses yellow and recrosses, and then you get a volume signal here. Look at that. It's the really ideal place to see the shift, and you can see the shift in the boomerang candle. Now they're pulling back. Here's a stronger surge down here. You got lots of punch going on here on the downside. You got to be a little bit careful if they start hammering down here, but usually they'll go down and hammer the exhaustion levels and they'll still have some left in it, as you can see up here and you can see here. So now you've got everything red. You got the crossover right here of the momentum number 2 indicator, which is the key method, the first one I showed you, and there's a pullback, the signal line. You can go short with great confidence seeing this setup, because number 2 momentum line's just crossing the 0 line. You go short, and there's your 3 points on boomerang. And if you're a brave soul, you want to hold a little bit more, you can see that there's a little more downside punch coming in here. And sure as rain, after a sunny day, here comes the overcooked tapping on the volume here. The volume shifts a little bit here with the color, and the histograms start shrinking. Now you have the matching color right here as the market's getting the final bottoming. Notice how you're actually getting advance warning with the color shift on boomerang here on the Volmo used on the boomerang chart. The shrinking of the volume, colors matching here, not crossing over yet, but catching right near that bottom. Histograms crossing over the 0 line, crossing over, buy channel, pull back signal line. You're moving above here now. You're all set to go. You got the number 1 crossing over. You got strong histograms moving towards the yellow and a little bit higher. And you got the number 1 coming in here. By the pullback, the signal line, and up they go, giving you your 3 points on boomerang. 95 jumping up to 04 is actually a 9-handle jump up there. And that's because of the new volume force coming in there. So you see how that works for boomerang? Let me run some real quick examples, then we'll end the video, because that's all there is to it. Those are the methods, and you just want to use those and be successful. Let me find a couple of days where there's some nice swings so I can show you some of these. I'm not going to go into detail. I've showed you the method. It's up to you now. Just go over the charts, have a good time, let them run on the live simulator. Is a similar deal here, where they're hitting the top of the volume surge. Doesn't mean it's necessarily a top in the prices. You got to watch them, watch that volume start to kind of fizzle out, which right as they surge here and the prices are pushing higher in a choppy fashion, notice that volume starting to flake out a little bit. Red line coming in here, your first hint of the red line. And again, here's the yellow line, but look at this. Here's what I gave you the method earlier for watching. Number 1, bias indicator number 1 crossing the yellow line. You don't want to trade the upside when it crosses over. You're watching for the reversal. And then here it reverses, and look at that. The red line now is reversing under that. Yeah, they're popping a little bit more, but it's telling you in advance. And there's the volume shrinking there on a higher pop. And then slowly but surely down they come, and the process starts over again. Boomerang trade comes in here at 90, and they drop them down to 85 with your volume surging on everything, matching on the sell side. High confidence trade. Now notice this though. Same thing. 1, 2, 3 taps on the yellow line. The bias indicator number 1 here. Momentum indicator number 1, tapping the gold line, not quite trading through, but tapping it and reversing. Get out of that short. Things are starting to shift. It's already gotten a little, got 3, 4 taps here on the orange line, yellow line, and a momentum indicator come here. And as this starts happening here, just get out of them, because all of a sudden when that, you got an advanced notice of these green momentum lines here, and then the shift happens and it just surges higher here, even though we're in a downside momentum trend band indicators. Still, they're surging higher, but look what happens. Jumps right up and hits the red exhaustion line. It's the exact high. It's a great indicator, huh? I invented this for you. Exact high, pullback, red histograms, red matching DTBs, second level trade. You know how good and reliable those are. Go short right here at 89, down they go. Same thing here, but this is a third level trade. We don't take those according to Boomerang rules, but you could see here what happened. You had a shift in the volume in a choppy whipsaw kind of period, sort of a whipsaw weak, wimpy weak kind of volume thing. I showed you this on the white chart. See the wimpy kind of, the number 1's not even crossing over the gray line here, just kind of small histograms, just barely crossing over here on momentum number 2, and then it shifts to the downside and they hammer them back down again with number 2 momentum holding under the 0 line. And coming into this period here, again, choppy whipsaw with, notice how the number 2 is just holding the 0 line here. Not much going on. Weak. The number 1 momentum is not crossing over even the gray line. What to speak of the yellow line? More pounding on the downside. Weakness. Histograms start turning up, matching color, and then crossing over here. You can get long at that boomerang pullback there with good confidence, and up they go. On this one, 78 quarter, ran 84. Nice pop there, and a little more to it as the number 2 crosses over the white 0 line. This thicker line crosses over. That's one of the rules. Don't worry, the pullbacks are going to hold up in most cases as they start jamming them higher. But again, not very strong with the number 2 only just barely going over the gray line and then crossing back under. Flaky kind of volume here. That's all it's telling you. It's just telling you the volume's pretty weak here, kind of flaky. Maybe it's just going to chop around a little. It's leaning on the sell side now, so they're pulling them back. But again, even though this is the volume, it's not based on the prices. It's telling you where the prices could probably go. Even though everything's weak here and they're crossing back under, they're still coming into the close. This last half hour before the close, generally you shouldn't trade that time anyway. Even though the sell volume's coming in, yeah, the pops are getting hit, but not much happening. There's a little shift here, but look though, see, it shows you how you can get these good readings. There is a shift in momentum, so all of a sudden these dips start popping here into the close. So that's the way you read the market with the volume momentum indicator. You can just apply it to your boomerang charts, and you're going to have very good success, I believe, if you really learn, study, and apply yourself. So I really want to thank you for joining with us today. And of course, if you have any questions or wish to purchase the volume momentum indicator, just look for the link on this post here on the blog. And thank you very much for joining with us today.